Hi, Tim Bigham back again this week for Delta Derivatives, option hedges and edges powered by the best option scanning tools on the market today, rbtrader.com, and looking at a market that absolutely is not powered recently. That 2100 level that we kind of talked about ad nauseum probably for people who've been paying attention finally gave way in a big way. We've seen really the worst market period since February of this year, so be interesting to see if we hold on here or if we fall. That 204 level on the SPY, kind of the next critical support, 2040 on the S&Ps. If we break there, it's almost Katie bar the door. I think if we pop through that level and break below it, we'll probably see the VIX spike up again big time. And taking a look, as we've been talking about, staying more, opportunistic and shorter term using those option scanning tools, looking at KHC, Kraft Heinz Foods, earnings coming out after the close today. This stock has been, a very nice performer as of late. Saw huge option volume on Monday, over 13,000 of the May 80 calls traded in front of earnings. Saw some add-on volume yesterday. Stock's been up 3 days in a row, so maybe someone has a little inside info, if you will, or certainly a strong feeling on how those earnings are going to come out here, but jumped in and moved out to June to avoid the implied volatility sort of differential there. So just bought the June 80 calls, sold some of those May 80 calls, put on a nice term structure volatility trade, paid about 45 cents on that trade, looking for the stock if we can mark somewhere around 80 on expiration, that will be a tripler. Also looking at some of these commodity-based stocks that have been just on a moonshot lately, but getting a little bit overbought here certainly. So taking some short positions on names like Freeport McMoran, Silver Wheaton, SLV, GLD. So I think, with the market weakness, we'll see the dollar strengthening. We're right back at that 93.25 level on the dollar index. If we hold that had been critical support, I think that'll be a big negative for commodities, oil as well. So, looking forward, I think the market may have put in a top for the year at 2100, given the fact we're at such rich valuations, interest rates low, but probably not going appreciably lower here, certainly. So I think that kind of PE expansion that we've seen will be coming to an end. We're going to actually have to get earnings and revenue growth, which we have not seen for 4 or 5 quarters. So we've seen the market rally with earnings coming down. I think we finally meet that point where it's going to take some earnings growth in a very tough environment to get things going. So until next time, this is Tim Bigham, and as always, but especially in this market environment, keep those position sizes in place and those stops going. Take care.